Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Good morning. Alright, well, yesterday we had some very interesting action. Move up. I guess they decided that it was too low here. Really, it's more clear in the end because here we have this support area. And of course they bought it up. It was a little bit of a crazy move up, but you know, maybe it just kind of seemed crazy because we're back into normal markets. I don't know. Anyways, we're back to a place of balance. Very much so. So we could take another step up. We could go back down. I don't know. The spread is steepening still a little bit, so that's good because we don't want it to invert. But geez, it's starting to get awfully close. Over here in the E-mini, they kind of, they had a bit of a dive. And we've been having a downtrend. Now we're not like quite down to, it's not like super dramatic or anything like that. Could just be a bear flag, frankly. So yeah, but we have the non-farms, which should be a pretty big one here in 10 minutes. So, and I have a little bit of food, so we're just going to watch it, see what it does into non-farms, see if we get some good trades off of it. And my plan, I'm going to be a little cautious because I've had problems on Friday. I'm going to really try and rely on the order flow. And be I'm not going to be looking for everything to just to go. Yep. Anyways, so let's take a quick break. We'll be back in 10 minutes.
we're just a little over 3 million then before the data hits the August non-payrolls. Seen around that 190,000 by most at 91,000, 157,000 last month. Range 145 to 237. Private payrolls at 100,000 versus 70. Range 177. Manufacturing payrolls seen at 24,000 from 7. Range 10,000 to 1,000. Employment rate seen at 3.8%, down from 3.9%. The range 3.74. Average earnings seen on the month up 0.2% from 0.3. That will be a disappointment. 0.1 to 0.4 range. Yearly, that would keep 2.7%, 2.6 to 2 range. Average work week hours seen at 34.5, unchanged from last range, 34.5 to 34. And we'll keep an eye on labour force participation, which was Canada employment change then seen at up 5,000 from 54,100 last month. Range minus 30,000 to 6,000. Unemployment rate seen in Canada at 5.9%, up from 5.8, range 5.86. Last month saw full-time employment at minus 28,000. Part-time employment up 82,000. Participation rate at 65.4. Again, just quickly from Deutsche Bank on today's number. Following robust ISM report this week, Deutsche Bank have upgraded their expectation for today's non-farm. They now see 185,000. However, past August payrolls have missed expectations by significant amounts, suggesting some risk for today's payrolls numbers coming on the soft side. Given this perennial miss in August, measures of slack and wage growth are likely to be more important. The unemployment rate should remain steady at 0.9%, and if our forecast average hourly earnings are correct, year-over-year growth should be at 2%. August unemployment report should thus point to continued steady income gains and a tightening labour market, keep the Fed on track to raise rates 2 more times.
Okay, so he kind of mentioned it there in his summary, but because we're trading treasuries, the average hourly earnings month over month always matters more for us. That's the number you want to listen to when he starts talking, and it's 0.2 is what we're looking for. Above that, we should probably push down. Below that, we might push up.
Minutes ago.
Looks like somebody is playing the options. Let's see. Okay, here we go.
Less than a minute. The 30-year ladder looks like a crude ladder.
Right. Let's pull this down. Leave this here. Just want to, I want to be able to see the orders if they come up though. So I'll just do it like that. Okay.
Book is thin, thin, thin.
10 seconds.
10 seconds.
Well, they're expecting a monster
Looking
for sure.
191 or 190. My guess is above 200.
201,000.
201.
Unemployment rate comes in at 3.9%. That puts average earnings then up 0.4%. Average
Holy shit.
every year, they rise to 2.9%. Private payrolls at 204,000. Canada employment change sees a drop of 51,600. Unemployment rate rising to 6% in Canada. 40.4 thousand full-time employment. Part-time employment.
I tweeted yesterday I was short. Small short position in the
recap on US data then.
10.
201,000
put on
the
some
headline
short in the 30.
from
And
revised
short in the 2.
147
So
down from
I'm going home
157
for the
last
weekend.
month. Private payrolls at 204,000
Just covered everything.
versus revised 153,000 down from 170. Manufacturing payrolls fell by 3,000 after a gain of 18,000 revised from 37,000. Government payrolls fell by 3,000 revised 40. Unemployment rate then jumped to 3.9%, 3.8 predicted. Average earnings then move higher from prior.
Block cell.
Year over year, we see gains of 2.9% versus 2.7. Average work week hours in at 34.5, unchanged from last month. Labour force participation rate at 62.7%, dropping from 62.9. Canada there saw a drop of 51,600. from last month, 54,100.
I'm looking here. The low on the 5th was 26.5. That's why there's the big orders down there. I'm kind of screwed up on that first placement, but that's okay. 0.4. 0.4 versus 0.2. That's the biggest beat on average hourly earnings I've ever seen.
Waddle, what made you go short yesterday?
I felt it was a little bit high, but I didn't really have a real big position. I was just kind of really, probably you could call it gambling, but I mean, it was such a small position, it didn't really matter. And I was going to hold it overnight. I was short from, I guess it was 6 and 6.5 in the 10-year. Like I said, it was last night around 8 and 9 o'clock that I put in some offers. They got filled. And then I was also short some overnight in the 2-year, just because I thought it was high. And once again, just real small. But the 2-year position covered half of it, so I was only short half a full position there coming into NFP. But I was like 5 or 6 ticks in the money on both of those positions, and so I just left them on this morning, and then just to see what they would
10,
do.
why 10?
And then as soon as I saw that put trade come through, I added a little bit to the 10-year position and put on a small 30-year position.
Nice. How do you see those puts? How are you watching it?
I believe it was a block trade, so it was just his name. Well, you can follow him on Twitter. It's @Stirs Report or @Stir Report. So @STIR_report. And he doesn't have a locked account or whatever. Anybody can follow him. And he tweets from the pit. I believe he's a broker for Eurodollar options and Treasury options, or and Treasuries in general. Anyway, so. But anybody could have seen that 55. I think it was just on the website. It's just typically when there's something notable, him and then 2 or 3 others will tweet about it. We'll tweet them out. And so.
So that's pretty reliable information.
I'll post the link for him. I'm not sure if I already have him or not.
Yeah, I know I posted him a long time ago, but.
Okay, there's an iceberg right there. Oh, yeah, yes.
I put that in Discord just earlier. Yeah, I mean, something like that, it just kind of signals that that whoever did that probably had a, probably got the number early or had a really reliable model and decided to go all in, But, I mean, it's not always that's the case.
Wow.
In terms of Fed funds,
I was going to say, I mean, you look at the amount of money that guy made. I don't know what those puts are trading at right now. But they're, I guarantee you, well above 3 ticks that he paid for them.
Now 7% probability another hike from December.
S&P's telling a different story.
S&P doesn't like that rates are going up.
I just noticed that he's not rallying.
So 30.5 is the top of this range.
Protect that trade. See the reaction here in bonds if that was kind of the level.
The 10s, 30s contract is got a weak bid at flattening by 2.5, so negative 2.5. So it went from steepening by a point this morning to, as soon as the data came out, it's now flattening by 2.5 points. The 5s 30s is flattening by 2.25 points. 5s, 10s by a negative half a point, just basically flattening across the curve, except 2s, 5s. 2s, 5s is steepening a bit.
3.5 is the price, but I'm not sure I want to take it because I see this big order up at 10 in ZB, and that makes me think that we could go a little bit further. There's also a big one at 120.
I hate how the bund got 2 ticks away from 160.
Okay.
And the ZB ticked 143 but didn't go below. And I just don't like that at all. Do those round numbers.
Didn't get the fill. Man, I've been having bad luck with the fills lately. 308th in line at 305. Okay. So that's interesting. Okay. I might have to pull this. If it pivots there, I don't want it.
Gilts coming under pressure here. On market pressure later.
I think that I see a target. I mean, it's September 5th, so Wednesday. We were down at 26, right? And I have a big support zone at 24.5, or a big area of interest.
At the moment. Wait.
So I do see potential to go lower, but I'm also just
Starting to creep back up.
Rosengren says US not well positioned for another recession. There was enough.
I disagree. I would like to hear more about what his reasoning is with that, because I think that we have enough room on interest rates that we could lower interest rates. As long as it's not like a disaster recession, like a almost Great Depression recession, I guess, then maybe it would be a problem.
There was a hedge fund block sale put through 10,000 deck treasuries.
I think that what we might have happen is we might range and consolidate upwards for the next 15 minutes, and then when the equities players come in, they might come in and buy the E-mini, because the E-mini really looks like it's in a buyable place. So all these bubbles, wow.
Right, so a lot of people reacting to the wage component of today's best jobs data, but BMO, yes, taking a closer look at the wage gains, while the year-over-year improvement is impressive, on a 3-month annualized basis, the 3.06%, 2.9%, and is effectively unchanged from the March level, 5%. Said differently, if comparable wage gains in Q1 did translate to realised inflation in H1, we're left to wonder if it will truly be different.
I don't agree. That's a 0.4 number. That's the number that we've been waiting to have for a very, very long time. That is really going to cause the Federal Reserve to think about raising rates. They have to raise rates at that point. So I think that this number should eventually push us down to the bottom. Man, it just ticks too easily sometimes. Only 927 to clear it, and then there's an iceberg buying it at 28.
The yen is quite firm. Retraced 75% of this move down. Bidding 66 quarters in the S&P. Dude, fuck that dog.
Down here is odd. Okay, so here was yesterday's low, and they're testing it. It just seems so negative. That's interesting. They really don't like it. Wage growth hits post-recession high. Tesla's chief accounting officer, Dave Morton, resigns after a month. That is not something that you want to hear. You're involved in that company. Yeah, I don't know. I'm surprised that the E-mini is pushing these levels, especially before the open. Like, these are good support levels and nobody's stepping up.
I think you buy the shit out of both.
There's the top down.
Hmm.
And you find it could hear from Fed's Mester. Raise a panel at bottom head conference from 100 a British summertime. Those unaware, Mester is major hawk, US Fed, and does have a vote 18.
Averaging 40,000 contracts per 5-minute interval for the last 30 minutes. Yeah, so what that put buyer is doing is he's just basically, in order to get out of his position, he's just got 10, basically, I mean, he's just going to be sitting on the bid down here. Supposedly there was already a 10K block trade at 29, and that was probably him. Or her. But he's probably already out of the position. Could be anyway. I wish I could share this message or this stream with y'all, but I mean this Twitter thread is what I'm trying to say. This Twitter thread with y'all, but there's 2 or 3 guys in it that are private, and it was hell getting them to try to follow me or allow me to follow them. I mean, otherwise, because I don't know if y'all can see if I link to the tweet. I guess I could try it.
Okay, there's the 26
It
half.
doesn't even let me copy a link to the. Oh yeah, I guess that's what a smart person would do. Screenshot it. This is the main one. Hold on.
160s and 143s taken.
A little bit of a change there in the end. They pushed down.
Lower there for Treasuries that are taken and then UK bonds. Yields now rise to 2.
I wish it could be short. I mean, that's where I was shorting from, right? But he just didn't give it to me. It kind of sucks. Mm-hmm. Well, now that they've breached the weekly low, how far can they go?
We're still doing the over there. Good study. If a recession hit any country,
Well, that's true. Okay, well, there was some significant activity at 26. Okay, so 7K into 25. They took it.
Block buy.
Okay.
Did the D9 Eurodollar smash through that 97 even level and did not even care.
That's the first time I've seen somebody actively step up and buy.
That had to be just a big profit taking cover.
Yeah, I think you might be right, because when it stepped up, they weren't like, sticking a huge bid to protect it or anything. And when it's somebody initiating, they usually put a big bid with it too.
Right. And this has a Eurodollar spread steepening like crazy through 2019. I mean, not like crazy. It's a bit of a old terminology there, but back at highs certainly. I've made okay money over. I wish the Z8 M9 Eurodollar spread was the only thing I traded all summer, because then I would have made money this summer. Because every time I put on, just a little bit of size in the shorting 27.5 Z8 M9 Eurodollars, they go right back down to 25
Okay.
within like a few days. And so we're bid, there's 18K bid there on 27.5. Because the odds that we're going to get more than one, and the fact that it wants to price in 10% odds that we're going to get more than one hike in that 6-month interval, a little silly. Especially since there's not even full odds of getting
Block
2
sell.
hikes in that entire year, 2019.
Nope, seller's not having it.
Block sell.
Oh.
That's crazy.
And 112 in the 5-year. Here we come.
Yeah, that one really sucked because I saw it going and I felt like there was nothing I could really do about it. Like a deer in the headlights. Okay, that was a good stack right there. Okay, now they really stacked. That's interesting. There's 4K on that bid. See, but the seller's still not having any of it. Hmm.
So it seems like everybody's talking more about the wage growth.
200-day moving average at 24 on ZB.
Okay.
Because the unemployment actually upticked, didn't it? Obviously, non-farms beat 10K.
It would be nice to be able to just get more than a tick, you know?
So that was the, I don't know if somebody's already said this, but that's the strongest wage growth number since June of 2009.
That is very good for him.
Yeah, especially since that's the thing that we've been watching for like a year now, being like, when is the wage growth going to come?
Probably the worst possible.
Okay.
Bought some nice.
I'm kind of eyeing the E-mini too. But the bonds are just not...
Bonds are trying to hold that 200-day. Yeah, and upticking again.
Did I take that off too early? Looks like it. But there's just so much absorption on the way back. Man, they're making this super hard to judge when there's 5k at every level to clear. Good grief. So the interesting thing about this is that assuming this continues for another 1,000 contracts or so in ZB, we'll actually be hitting the high of the day in cumulative delta in ZB.
Wow, I wouldn't even pay attention to that money that they bought as we moved down here. I mean, they haven't bought, but it's still positive. I mean, they bought a ton in the 10-year back as well. Quite a ways off the lows. I mean, like 50% retracement of range.
Yeah. I did take a long down there because there was just way too much activity. But, you know, I just couldn't get myself to hold on to it. Like, it took 2, and then it was like, they're absorbing 6,000 at every level. Like, how do I know if this can keep going? There is that little step in the level 2 at 26, though.
like they're holding the 200-day bonds.
Those puts are 16 by 18. The 120 puts that are expiring today are 16.
I mean, I really want to try and take a long in the E-mini like I did yesterday, but it is not showing me a spot. What the fuck?
Which isn't doing much. Price which was down over 6.
Block by.
Tesla's gonna get murdered today.
Oh my god, that was amazing.
Why?
Block by.
He was smoking spliffs with Joe Rogan yesterday on his podcast.
Nice.
Campbell says the board review the director nominees proposed by. And for those who 3.1 actually just take out the whole.
Well, they really bought it there. Wow.
Oh yeah, it's funny y'all say that because then on my Twitter feed there's something about Tesla. I guess the stock's down 7.5% right now.
Well, so what happened was their chief financial officer, who's only been in for a week, says that he's quitting. And now, just over the wire, their human resources director is now saying that she's not going to return back from leave. So, if I was an investor, I would probably be wondering if there's some sort of fraud going on over there now.
I think the whole sabotage argument and the espionage thing. Like there's a lot of rumors going around, especially from news tweets. Someone's trying to there's corporate espionage going on. I don't know.
That's interesting. Man, that's some crazy action there in the 10-year, around 26. You kind of have to wonder do they really have a reason to be buying that much, or is somebody getting too big for their britches?
Funds are back above 160.
Could just be. Well. Yep, I agree. So let me show you here.
It's funny. I noticed on Twitter a lot of people have or yesterday they did. I'm talking about having a.
We could maybe do it at 66 now.
BB position because they thought equities were on the verge of something big as far as failing or breaking down,
Puking.
I guess, or whatever. And like that so far seems to be like a completely worthless trade. I mean, equities are pretty. It matters. He'd be pushing.
Oh, right, yeah.
I mean, it was smart. Like if you were, I guess, hedged, like a short 30, or if you're short, stocks, then if you were wrong, then to hedge it, you could short the 30. That guy's making a lot of money for no reason. It just happened to be that it's positively correlated all of a sudden. It just seems like everybody has that trade. They're using the bonds, the 30-year bond, to bet against stocks, and it's like not working out.
I find it really interesting how the market somehow always finds a way to disappoint the maximum number of people.
Yeah, well, it's like, I mean, I know I saw a few NFP guesses yesterday, and they seemed really low. Like everybody seemed to think that it was going to miss, and so, I mean, I don't have any kind of advanced model or anything, or really any opinion on it, much less anything else. It just seems like there's a ton of guys on here that I view as smarter than me that got it wrong. I know they're probably just guessing like me, but I don't know. It just seems like anytime anybody's crowded into a trade, not
Yeah.
100% accuracy, but like typically when people are crowded into a trade, they get run over. Like was it first quarter of this year? I lost money doing it. I was betting on steepeners of like the what were they? I think the Z, like Z9 M20, and let's see, I think I did M8 and M9 or something like that. Anyway, basically they're all the Eurodollar spreads that are literally 0 basis points right now. Because they at the time they were like 9 and 10 basis points, and I thought it was goofy because I figured, okay, as we get closer, the Fed's just going to keep announcing rate hikes, and those are going to jump to 25 basis points and 40 basis points, getting ready for a couple more hikes or whatever. And all they did was, it seemed like all in one day, they all smashed to 0 basis points. And it was right after one Fed meeting, and I don't even know what was said at the FOMC or whatever. I don't even remember what was said, but in the subsequent days, like 2 or 3 days, they just smashed down. Paper smashed them down to 0 basis points. They've been there ever since. They haven't remotely fluctuated off of that. Some of them are even negative. Outside, once you get spread, like they're good through 2019, but if you look at if you look at December 19 to anything in 2020, everything is 0 basis points. 0 to half basis points. Anyway, but it's like everybody was crowded into steepeners whenever they were like at 7 and 10 basis points, and then all of a sudden they got their faces ripped off in like 3 days.
I blame Jeffrey Gunlock.
Ooh, okay, that was interesting.
He was tweeting at 145 at a bond squeeze. 30 years.
Oh yeah. Well, wasn't it a couple weeks ago? Yeah, it's like 2 weeks ago now that everybody was talking about a squeeze in the.
Yeah, they're talking about net short positioning.
Yeah.
The 30 years.
Yeah.
Even I was kind of using that. I was buying before. But yeah, I mean, now we kind of exhausted that, and we'll see. I think this is a pretty definite battleground zone. A couple of weeks ago, when we were in that 142 through 141 range, this level was kind of like a high point where we had that big up Thursday, Friday a few weeks ago. Back here now.
Yep, exactly.
200-day moving average at the low of day today in the 30-year. And the yen, the move over the last 2 days, kind of interesting. I mean, that number, that NFP print is the wage growth it's very, very strong.
Very unusual. Yeah.
Well, actually, I'm about to mention it, but it's a
Okay.
place I saw. It was not Twitter. It was Discord, I guess. Somebody had posted it. That last 17 over the last 21 years, 17.
Yeah. 17 out of 21.
Expectations in August for NFP. Who posted that? There it is.
Yeah, I posted that. Yeah.
Yeah.
But that's the thing is the for Treasuries, the headline number doesn't matter. The wage growth is what matters.
Right.
When I saw 0.4, I mean, for some reason the guy in the squawk didn't say it immediately, but as soon as I saw 0.4, I was like, oh, we need to sell this.
Right. But yeah, the NFP, that's the big fancy number that everybody talks about, whatever. But I mean, it seems like wage growth has been in headlines and in just everybody kind of talking about it. I mean, that's all everybody talked about here in on Twitter. I've got all the major rates guys in a list, and that's all they were talking about as soon as the data came out. Everybody's been talking about the wage growth and how impressive it was.
Yeah, so the big question in my mind now is now that we can't harp on wage growth, what do we talk about, right? Like that was a big thing in politics and in rates and everything. Now it's like what reason really is there to not raise rates and to push forward? I don't know. It's almost I mean, like 0.4 is almost too much in my mind. It's like, well, geez, now we're going to get crazy inflation.
Fixed upper limit. The pace of rate increase due to how much outstanding debt there is. There's actually like a fixed cap.
Right.
I think that's the only thing. They're trying to balance that out, timing wise. Yeah, you're absolutely right.
And yeah, it makes the trade in treasuries really hard, I think, because it's just the nature of trading. You can't have everybody right, and if everybody's going short, like, that doesn't work, right? Half of them have to be wrong.
But jobs report obviously failing this, and TD Ameritrade.
I don't know if that's necessarily true.
Futures open down a little bit. Could be on wages.
Think about how
afraid of
prices
hikes.
move.
It certainly reinforces that September is almost definite. Makes
it's more about aggressiveness.
AJ Killer, chief market strategist.
It's just how those extremes made is how are wrong and do the worst thing, worst possible.
Yeah.
When somebody buys yourself aggressive.
Turns of increased inflation.
Well, it's kind of like so I say this a lot on the stream about Bitcoin too, but like when you get a really impulsive move, I'm kind of like, okay, that was an impulsive move, that might come back a little bit. It's when it just goes down a little bit, just a little bit every day. That's when you really got to be concerned about something, assuming that the direction of movement is bad for the economy, right? Because that's when it's like everybody is positioned a certain way because it's just so obvious what's going to happen, and because they're all positioned, it makes it hard to move, but it just moves just a little bit every time. It's like those bubble up and bubble down moves.
And trade issues as with and emerging market currencies, Argentina, Pluto, there's set as free float X is there to absorb.
Wow, they're just pulling that 23.5. well, those bids are not very trustworthy. I think they just pulled from like 4,000 to 500 there at 23.5. They may take another step lower just to fuck with everybody. All this white up here is really bizarre.
We're
I've
gonna
seen
get a new NAFTA agreement over the weekend. Bonds are gonna be up.
So I'm seeing this iceberg in the 30, pretty big right there. But this is not. See, it's just not quite right. Okay.
Oh yeah, through NFP, the so basically the projection for rate hikes in 2020 is, or from I'll put it this way, from Z9 to Z20, we've got -1 basis point, or actually it's offered -0.5 basis point and did -1.5 basis point. So, and that didn't even remotely move through this. And like I said, at the beginning of the year, that was like 15 basis points.
Like, I mean, I could take 24. Should I take 24?
Just tighten the
Okay. Wow. Well, that was a fast 6K. Would like to see more than 13 bid. Okay, 2000 is okay. I like what I see in the 5-year.
Stat. Or you know what? I'll just share a link to the.
It's kind of just the same frustration as like you find a spot and then it just never goes until you've given up on it. 20-day average volume TY1 for this time of day negative 500 versus 886K. Oh wow. So big difference. Okay, now we're almost flipping. Offers don't want to give it up. The bid's stacked and the offers stacked more. Well, I'm going to take that off. It's not giving it to me. Okay. See the big order moving up and down.
There was another 15K block at 24.5 in the 10-year about 15 minutes ago. Probably pretty close to the last of that guy's position.
Nope, no thanks.
$718 right there. 2 in the 30-year in one click.
See, the bid keeps building.
BP Whiting Indiana refinery to begin shutting November for work. Back in.
Yeah.
Bonds are getting kind of disconnected now from the yen. I think stocks are really bullish today.
That bid is revving the throttle. I keep revving between 3,000 and 4,000 on the bid. I haven't seen that in a long time. It's kind of nice. Okay, well they're not quite ready to take it there yet.
It's time for me to puke bonds. Fun.
Was that your 480 left? I'm kidding.
Maybe.
Yep, as soon as he said that, they put the sell on.
Really long spews. It's like it's such an easy trade this morning. Long from 66.25.
Wow, good job. See, I was watching it there, and then they took a dive, and I kind of stopped paying attention. But it did give us the buy, didn't it? Right there. It was right there at 28.65 was where I probably wanted to click in on the E-mini. Man, I don't know. I do not see significant levels below us until like 15 in ZN. Okay, there's the E-mini is pushing down again. That might give us this. Okay, good so far. $9K in ZN.
All right, let's get the spews back up above 880.
Good deal. That one worked really well again. Maybe probably could have held it. I mean, the way that it was moving, it kind of makes me think that we're going to come up to this one up here. But I think it's better that I just take my target, you know? Like that. Now I'm profitable just because of the E-mini. So I'm wondering now, with there being a 10K block there at 23 and them appearing to have trouble at 22.5, we might have had a one tick lower failure. And one of the things I've noticed is that when you get that spread guy, it tends to move quickly, whichever way, and it follows it. It just kind of pushes it along, but it's not really doing that. Okay, so now there's a 7K offer. And it should have just held it, huh? That one was worth a couple hundred more bucks. Well, a 7K offer, that is just ridiculous. So when you get something like this, so I took it off there, right? 1, 2, 3, 4, 5, 6, 7, 8. Okay, so 2 more ticks. But I'm just wondering, like, where would you?
K of covering. Yeah.
I don't know. It kind of seems like it would be a lot to expect to see it just go zoop and back up to here, you know? 79. So I'm wondering, now that they've traded through it, maybe they come back down here. Treasuries aren't actually flattening. That sell was a little over dramatic though. In fact, I'm
It's the
seeing
biggest fall for Tesla years.
oh my gosh. When I was like, man, Tesla's gonna get murdered, I thought, well, they're down 3%, so like, yeah. And there was 7% more in that. Good grief.
Yeah.
Yeah, I can't remember what the company was, but a very, very long time ago when I really watched stocks, I remember seeing something similar to this. It's like when the chief financial officer quits, it's bad, bad, bad.
That Theranos that a couple years ago.
I thought you were talking about
Seeing
the
some comments
electric
now
car
from
company.
Central Bank
Another
Chief Caputo
KNDI.
saying we have closed all channels.
Might have been. Well, that's a thing known among asset managers, that when the chief financial officer leaves under questionable circumstances, that you bail.
While the crash and burn at Tesla seems to continue, the shares now on track for their
Yeah, they're
worst
doing
days
they're
in
doing a movie on
2016.
yeah, it is Theranos. The one with Elizabeth Holmes or whatever. Was it a diagnostics company or something like that a few years ago? The real big one. Anyway, they're doing a movie on it. Oh, that's kind of... Yeah, the book Bad Blood.
Oh, how low did they get? They did go back. That's funny.
I
I
just
missed
don't know
it.
how we haven't seen a Musk Nike bot meme yet. Like, I just don't know how Twitter hasn't produced that for me.
Yeah, that's not quite what I want to see. They are kind of looking to do it at 21 there. No, I know. Okay.
Some comments now from the White House economic advisor Larry Kudlow saying that they are still talking with China on a number of issues. Kudlow says he's not China out of business.
Well, why not? I'm just kidding. You know what? I haven't been checking in on you guys in the YouTube. How are you doing?
US asks, demands of China have not been.
What'd you do? Did you guys make your tick? Okay. It's fighting a bit too much. Too much there at 22.
I was really hoping that this ZB would be at 16, just
Good job.
as it might work out for me. Just as the 5-year was at 113 even. Okay, so there's 16.
This is not stopping, folks.
That would be like an ideal bottom, but I don't know. It really doesn't act like
More
it
from
wants to
Argentina's
bottom
central
out.
bank chief. He says current account deficit is to fall at a faster rate than expected.
Forget. Does anybody know what 3% on the
To 10 years.
I mean, on the 10-year is? Like in relation to the December contract?
Yeah, the spreader moved this thing down to 12. Good catch, Uzi. Now 11.
Sales are on the board, and who described in his ongoing CNBC talks with steady, aggressive, hardly
Yeah, it took way too many trades today, huh?
decision
Okay, that's crazy.
Meanwhile, Larry Kudlow
Okay,
says
so
that
it's
China may
like
find themselves more isolated if they don't begin to say yes
119.06
to President Trump's
is a
requests.
3%. It seems off.
17K at 20 half. That's the biggest one I've ever seen. I have to. That is the that's the setup, and it's the biggest numbers I've ever seen. I want to see it tick up, and I want to see big numbers when we tick up. So I think this number does not really matter anymore. $20K, yeah. Wow, really? Okay, so it's 5 right there, 20.5. Not a huge bid on 21, but that's okay. Okay, I see
Pretty
this right
surprised
here
it
is.
just didn't put the bund through Wednesday's low.
Argentinian peso reversing loss. Turning positive.
I know, obviously, because it's 16, that's a strike price, but this is kind of a, it's like between 16 and 11 is where I've got support for the 30-year. It's really old support, but there is a swing low at 11, and then 16, of course, is a strike price. So.
Canada.
We got a support at 30 years. God, fucking killed me today.
I've got a swing low at 27, 141, 27 in the 30-year. Way back when. And then in the, what is it called? In the 10-year, there's nothing for a little while. In the 30-year, there's a, you know, obviously this is back adjusted volume-based rollovers, so I do have swing lows in the 30, I mean in the 5-year, between 30.5 and 29, but of course that doesn't really mean anything.
Yen is back at lows and might go green here. 6 away from yesterday's pullbacks close. Cash session close was 78.
Notice that the big order moved up 3, even though we didn't actually go higher.
3 minutes to the top of the hour. Then we got Canadian data in the Chicago PMI. Easily adjusted, unadjusted. Adjusted, we're looking at 61.8 at the range there, 57.63. Unadjusted, last month's 6.
Yeah, 20.5 is 83.
That whatever the incident was, East London, that good shopping centre now reopened.
Okay, now that's suspiciously weak.
we're moving in the 10-year, we're moving into the value area from, see, I've got a 3-week block. Set it real quick. Week of
rebound
22nd. 20, right, so
still down about $3-4.
the last 2 weeks of July, the first week of an easier way for me. So July 22nd through August 12th is the last time we spent a significant amount of time down here in this level in the 10-year. In the value area, 70% of the volume occurred in those 3 weeks between 22 and 8.5. So with the point of control being 14.
61.4 predicted for the seasonally adjusted, 61.3.
Mark that area now.
Adjusted
and then there's a major level down, obviously, at 119.02 and a half through 118.29 and a half.
So they're absorbing a lot here again, and the bid is stronger. So buyers are trying to force people to eat into 21 now.
Moving back down.
But the seller is not giving up.
Into that kind of value area, which is also kind of a value area from like June 3rd. All right, so the first half of June. Yeah, wow, that value area is almost identical. So I'd say 119.22 from a market profile, volume profile perspective, which my analysis of using that analysis, I bring with me a huge grain of salt. There just seems to be a lot of value whenever it gets down to this level between 22 and 08.5 in the 10-year. Definitely worth looking at.
Okay, that last move might invalidate my trade.
12.5. So even the
so you're not seeing the big order here anymore. And there was an iceberg at 20.5.
To gravitate toward 14.
Too late.
The 14 and 12.5 area.
Too late.
Volume profile, market profile view of what could happen in the 10-year. This could kind of make sense because, like I said, there's the bond guys on a Twitter seem to think that, or their models show that a 119.06 relates to a 3% 10-year rate, and 3% is that that psychological level that CNBC and Bloomberg spend all day talking about whenever we get there. We're at 2.94. So should be getting into that 3% level. We get down to 119.06.
See, how many times have I tried to buy it at 24? Well, that was fucking stupid. It's just like, how do you know how far it's gonna go? Because the risk reward has been off. Well, I take that back. So there was, I can't really show it on this chart. There was this spot right here, 26. There wasn't any, I didn't see anything unusual on the offers, but it was that 26 was, I missed. I think I tried selling it there. Did I try selling it there? I don't know.
Again, Kudlow's comment about evaluating 200 billion of China tariff list, decide on timing and rate. Decide on time.
Shit. Not what we were supposed to see. I'm really, so I'm going to need to make some adjustments off of some of the things that we saw today for sure, because there was some good signals it gave me that I missed. So it's turning into that when you get filled, then it's probably a bad thing, and because you are trying to get filled on limit, that biases your trades and not in a good way. Okay, well that didn't hold quite the way it should have. And there is a big offer there at 21.5. You think everybody's going long right now? Well, there's definitely some buyers.
Really, a lot of repeats of what we heard from Goodlow. No comment on tariffs. Trump is still talking trade.
Hmm.
Mentioned constant communication with China.
This is definitely the last one, by the way. Well, the E-mini looks like it wants to bust highs. I don't know if that means it's going to push us down, though. Well, could.
Okay, I'm trying to get out of some of my S&Ps above the Globex high, 82 and 82.5. A huge down day for me, but money back.
If they can get above 21.5, this could, we could have some pullback here. Hmm. in silence. So I always like to see where this sells. If I have. Well, I'm not sure why you would be buying back up at 30, but that's okay. $10,000 at 21 now? Okay.
Let's say it's now 17,000 into 21.
Tight timeline.
Well, it is the not quite the point of control now. Well, 21 is
Almost 20,000. Yeah, it took almost 22,000 to finally lift it. I guess lift it again.
and they only stack. Well, I guess it's 18 now.
Irish is Brexit says he wants to see Brexit agreement by November. latest.
This kind of action is, though, it makes me wonder if we've found a balance and that it's not worth playing anymore.
Right, yeah, that's kind of what I'm definitely done.
Well, that was a little better. You see that, and it's like you get a good tick up, and then the guy in the offer is like, "Nope, that's as far as you go."
In the last 10 minutes, 31,000 contracts have bought 21 and 19, or well, almost 20,000 contracts have sold. Okay, now 20,000 contracts have sold 21.
Well, seeing that much volume going through at my price.
Hello?
Hey.
Hello?
Yep, we hear you.
What's going on?
We were just saying that we might quit.
Yeah. The Treasury bonds. Notes.
What are y'all bullish?
It really looks balanced right here at 21 in the Treasuries. The E-mini kind of puzzles me a little bit too, because I mean they sure were buying the crap out of it there, but it's not like they made a new high.
Right, yeah. How many? They just needed a couple more ticks for the Globex high.
Because yeah, I've found that this happens on Fridays sometimes, is, you know, I'll see some opportunities and everything, but it's kind of like all the big boys already went home and you're just scrambling around for ticks now.
Yeah, this is kind of a. I mean, it did this exact same thing yesterday, where, I mean, probably right after 10:30, it just sat there in a 14 range all day.
Right after I left it, and it just stayed there. I was like, wow, okay, I actually did see the whole thing.
Yeah. I know. I was sitting there looking at it yesterday, and
The Italian budget,
you know, I
will be a
mean,
real
it
test
would have
of
been
governance.
uber
Talk
boring,
about,
but
the US and the Fed.
like in the 10-year,
It says there
if you would
there
have
is a
just sat
potential
there
there
and
for,
offered
a
6.5
downturn around
and bid 5.5 from
So White House's economic
Let's
advisor
see.
Kudlow says that dairy issues
10:20
NAFTA deal with Canada.
all the way to the
Speaking on
close,
Fox Business
you would have
Network, he's
made
doing
money.
the rounds at the moment.
So you know,
Block.
for 4 hours, if that's all you did,
Canada.
then you would have made money. That, of course, isn't consistent necessarily. Like, it's not gonna happen every day, but that's exactly what it did yesterday.
Dollar CAD there, 130, 143. It's quite a lot. The Canadian alluding to, but
Or maybe at least bid. Yeah, because the range was 7 to 5. Yeah, 7 to 5. And so if you bid 5.5 and had it immediately offer 6, and offer 6.5 and immediately bid 6, you just get filled at 6 over and over.
Did anybody take a short at 26 even in ZN?
I didn't know.
I didn't take a short, but I puked half my position around there.
I'm just not sure what it is that I'm not seeing there, but that one right there was a big mistake, I think. I took a long there and I scratched it, and I should have been going short there. I mean, in retrospect, I can see that I should have been going short there. But so now I'm wondering, was there something going on that I missed that was a signal? But I don't know.
Yeah, it was just a graceful exit. I'm sure whoever was long,
Right.
they're wrong, and then it upticks 5 ticks or something. 5, 6. Sorry, if you're long like 1,000, you gotta hit like. Then there's a 500 bid, you just fucking take. Especially when it looks like it's about to go up.
It looks like it was just profit taking because there was like, then right on the news it smashes, of course, and then there's some buying, you know, like where it kind of snaps back up, and then it smashes, and then you see right around, right at 8 o'clock, when that second round of profit taking is what I would call it. Like, I'm just assuming here, I don't know for sure.
Oh, yeah.
It seems like it would be profit taking right at 8 o'clock, and then at about 8:09, almost 8:10, that's when the next smash came, and then now we're kind of doing the same thing. But it seems like this isn't so much profit taking. Like, it's not. I don't think it's going to smash again. I think it could just sit here all day.
Yeah, it's way too much volume now at 21 to.
Because nobody's going to go long into the weekend, I don't think. Not after that. I mean, they might. I don't know.
Did bonds get smashed with one of the reports or something?
Yeah. Oh yeah.
Yeah, it's non-farm payroll this morning.
Oh, wasn't too strong.
No. So the income increase. What is the correct terminology here?
Wage growth.
Yes. The wage growth was 0.4 versus 0.2. So it was the strongest wage growth reading we've had since like the whole crisis.
Yeah,
I guess that's why the markets turned around. Cash markets.
Well, so Treasuries get smashed down because that's inflation, and that means the Federal Reserve is going to have to raise rates.
Right.
The E-mini, I can't really explain what the E-mini is doing. I don't understand why it's doing what it's doing. Which is funny because that was like the one good trade I had today. Oh, I didn't post the window. I should post the window here. See, if you take out that E-mini trade, that's super bad. So
Block sell.
So, the thing though, the reason why I ask about that 26 is because when I look back at it, I'm sitting here going, well, okay, so I did see some edges in places that you could go long and signals and stuff like that, but there was clearly another element going on there that was off kilter, because if I said, if I had gotten filled at that one that was at like 30 half, that I would have been holding it to see if it went through 26 at the very least. And then, when it went through there, it went through there super strong. So you could maybe hold it all the way down to 23 potentially. And I'm just kind of wondering, like, it seems like the psychology is affecting which way I'm going way too much. And then when it does give you a good risk reward on a short, again at 26, I don't take it.
see what color it's printing. Let me post it. I would have just never even remotely looked, even if the order flow was sitting there looking like they wanted to buy it. As a filter, I just would never ever buy on a day like today. Like even as if you look at the chart, even where I have it printing that lighter color of red, that's actually traditionally, like the way it should actually read is, you know, the sell signal is getting less strong, like it's weakening, so you might want to get out of your short. But on a day like today, when it's so clearly a trend day, whenever that prints, it's actually an opportunity to sell. Like it's at you want to wait for a, you know, you want to start looking for a short, you know, an additional short there, because it's, you know, it's just not gonna, it's just a profit taking, and they're probably gonna slap it back down. So it's like that where it lightens up is, you know, technically I have it set up so that it's telling me that a sell, you know, or like a downtrend might be ending. But I mean, on a true trend day, that's actually the rotation up that I want to try to sell.
That's nice, Waddle. Didn't give you any longs.
Well, assuming that you know it's a trend day, right? But
Exactly.
it's news. You know, that's the frustrating thing is I don't even understand quite why I tried to buy it so many times, because it wasn't like I thought that we were going to move back up. I was just trying to take a tick or two.
Right. And I mean, for a long time, I mean, I would do the same. And I'm not saying that it's impossible or that nobody does it. I mean, I'm just saying me personally. I mean, this is probably just me. I have a massive fault as a trader that I just psychologically, whatever it is, I cannot play mean reversion and remotely win. Like I can't even, like on a day like today, if I'm printing, you know, red on the chart, not that I'm just trading charts. You know, like I said, this is like this gives me just a backdrop filter. I don't even remotely I'm not taking trades just based on the chart. I'll always lose whenever I have that thought in my mind that it's like, all right, we've been moving down. You know, it looks like they kind of want to buy here. So, you know, they lift a level and I say, okay, well, why won't they lift the next level? Like, you know, the buyer is clearly still there. Let me go for it. And it seems like, you know, anytime I've tried to do that, I always seem to get, you know, they just jerk it right back on me. And even if my intention is just, you know, I'm not going to sit here and hold this, even if it looks like it's going to keep going, I'm just going to take a tick. It seems like I always get screwed on those personally. And, you know, I could have got a better price if I would have waited or whatever. It's just, I cannot play mean reversion even remotely.
Yeah. Well, so I tried playing both sides, right? So that's the kind of the thing that's really, really interesting with my trading today. So I'm mad that I missed the one at 26 and that I was going along there, but I did place in some shorts in other spots, and it was kind of like you know, they didn't get filled. You know, like I tried to short at 30.5 and I was just barely didn't get filled, for instance, you know. So it's like if I do the mean reversion thing, then you get into time periods where the market wants to trend, which it seems like that's what we're in right now, although we'll see what next week might be a little bit different. And so the mean reversion trade really doesn't work right now. But then when you take the trend trades, I get one of three things. You either don't get filled, you FOMO into it, and you end up buying the wrong risk reward, you know, or you get bored of it and take it off because it's just not going yet.
Right. Well, here, there's a question for you, because you seem to get into positions sometimes different than I would. How often do you park an order? Like, you know, like let's say, like, I mean, like earlier you missed a fill. You were on the offer at, what did you say? I forget what it was, but anyway, you know, you were on the offer and you just didn't get filled. You were like 300 in line or whatever, and it went ahead and went on. I mean, do you ever, like, is that how you get in a majority of your positions like that? Or, I mean, do you ever go with the, with the...
Yeah, I get what you're saying. Like how often do you try and take it as she goes, right?
Right.
So right now I'm always trying to get filled on a limit order because my focus is trying to get that risk reward down to 2 ticks risk. What I was doing more when I was doing well was, if I saw it, I would try and take it as she goes. But the problem that I had with that one was that it was so often that I would end up, selling into the bottom of the range or whatever it was, So that's why I stopped doing that. So in that case, the risk reward was really good at 30.5. And could I have market bought into, 30 or 29.5? I absolutely could have. But you do that over the long run, that kind of screws you over, right?
Right. Well, that's interesting, yeah, because I mean, I guess that's just where it probably once again speaks to my philosophy of, or my aversion to trading ranges or anything. I can't. I did that for a little while. Like, it was mainly in the 30-year. Since I've kind of moved over to the 10-year, since volatility's picked up a little bit. If I ever did that in the 30-year, it always seemed like it would, run me over. Like if I parked.
Oh yeah, yeah.
So I mean, maybe it's different in the 10-year, but I don't know. I've kind of come over to the 10-year with the same philosophy as I have in the 30, where I'm trying to catch her as she's going. And actually, to me, so far anyway, like I said, I've only been actively trading the 10-year. I did a little bit at the beginning of the year, but it was kind of low volatility, so obviously I stuck with the bond. And then over the summer, stuck with the bond, but things have picked up, so I'm liking the 10-year right now. Anyway, seems like trying to catch her as she goes is here in the 10-year than it is in the 30. Like, a lot of the times I'll miss it in the 30. Whereas this, it's like, if you're really watching, like right now, they might actually clear out the 21 offer. Like, if I wanted to get long, they might clear out the 21 offer in bonds, and I'll totally miss it. Whereas in the same amount of time, they might just take the 22.5 offer in the 10-year down to 900, and I can just, as long as my reaction time is good, I'll catch it, and then boom, I'll be immediately in the break-even trade. I'll get the free look that John Grady talks about. And so it just seems like it's, the bond, obviously, with it being higher, volatility naturally, it just gets away from you quicker. Whereas the 10-year it'll wait on you.
Yeah.
Not always, but more often than the 30-year, certainly.
Well, in the 10-year, it's like those icebergs. It's like until that guy gets filled, it's not doing anything. It's kind of weird how that works, but
right.
It's almost like the market makers know that, okay, maybe there is a buy here, but they have to sell it through him first in order for it to go. But yeah, I don't know. It's kind of funny because it was like I was saying, if you took it if you just take the trade as she goes, which is like you see a level and there are people absorbing just above that level, and then you take it as they break through it. You trade that from December to March of this year. That's profitable. And then you take it from April to about the end of July, mid-August or so. That was just absolutely awful trade. And then since then, it's been working really well again.
Right.
But if you look at it as, okay, there is an as she goes, and I think it might be there, but I don't want to be selling it as she goes. I want to get it before she goes. And I want to get the optimal risk reward. Then you would have been able to be profitable that whole time period. I think. It's hard for me to really test that stats wise, but I think that that's profitable through the whole time. It's just that it's like, teeny tiny little details. It's like 30 half. Well, if I had just clicked a second earlier, I would have gotten filled and I would have gotten it. And it would have been a very different story, wouldn't it? And then that affects your mental state. And then that would maybe deter you from wanting to buy it later on and things like that. That's why it's like, it's just super, super tiny things. Your strategy overall might be right, but it's just little things about how you trade it, or just you being able to control your emotions makes the difference.
Right. I definitely know what you're saying. Just out of curiosity, or I guess what's your kind of exit strategy? Like, are you kind of doing what John Grady does as far as you're in, and then you're just waiting for another signal in the book to get out, or is there like a specified amount that you're taking?
Yeah, that's a good question. So a little bit of both, and it just kind of depends on the context. So there's some, especially if it's like a mean reversion trade, that I'm only taking like 2 or 3 on. If I see like a really big absorption, I tend to get out there. But I'm always in the 10-year. It seems like in the 10-year, if you get 4 ticks at once in the 10-year, it's usually pauses. So whenever I get 4 ticks, I'm always at least thinking of taking a profit.
Right. Yeah, I kind of have the same philosophy. I was just curious because John seems to. I mean, he's real whatever about context, and talks about context, like in all the Q&As. Somebody will ask him a question like that, and he always just says, "Oh, well, it's the context," and "Oh, well, it's the context." It just depends on where you're at. And anyway, that's what I was curious if you were.
Yeah.
But yeah, it's essentially the same deal. I just try to have a plan for every time I click them out.
So I kind of have a weird theory about this with John Grady, and we've kind of talked about it a little bit before in the chat, but I've never expressed this particular thought. I don't think that his method works the way that it used to anymore. Like when he was trading that, and when I bet he did really, really well, you look at the average range on the Treasury charts, and it was ridiculous. Like, we were just in a really big bull market for a long time when no BS day trading really first came out and was popular. And when you compare that to the volume and the ranges that we're getting on now, it's much, much smaller. And so even though reading the order flow is the same and everything, it's like the context is different, right? And so if you go back and you watch his webinars and you take the same kind of spots and action that he did, it doesn't work as well depending on the day. Today it would have been good, right? Because it was a trend day. But
Seth, the style of trading that he was doing back then, I agree. It's not paying as many ticks as it did back then. But I think overall the concepts still work. I'm using them.
Yeah, the concepts are still right? Yeah. That's why I'm like, it's the details. It's like, where are they absorbing? Where are the big orders, and what does that kind of mean, and how does that affect things? I think that's all right.
Yeah.
It's more in the details of like, okay, but what is it that I need to see to convince me to click in, right? And that's something that I don't think that John Grady even can specifically lay out exactly what it is that gets him to click, because a little bit of it is feel. But I think that if you did those same trades that you see on the webinars, you probably wouldn't be profitable. But it's still, the method is still right.
Sure. Yeah, well, he did. I remember he mentioned that in one of the, I think it was in probably one of the more recent ones that he did, because I know his oldest one is like 4 or 5 years old now.
Yeah.
As far as the free content, But he did mention in a Q&A that, it used to like he I think it was verbatim, he pretty much said like this used to be awesome, like the bonds, they used to be so much better, like this whole 1.5 move in the 30-year, that was like a normal day back then, and then NFP would be like 3 points. Whereas now you have to trade NFP in order for it to be like a normal day 6 years ago. And anyway, yeah, because he had mentioned that he was like, yeah, it's all still here or whatever, but it used to be an awesome trade and all this stuff. But
Block by.
anyway, yeah, I bet you're right though. I mean, he's probably just changed the or as far as he probably just has so much experience that he doesn't mind teaching the same concepts, but he himself is probably, it's more of a feel thing that isn't he still making money regardless of the change in the market.
Yeah. It's like I forget what webinar it was, and I don't remember who the guy was, but he was saying that when you're in the right market, everybody makes money. And when you're in the wrong market, even the best of the best just kind of break even. And I think that's maybe a little bit of what's going on in treasuries these days. I'm not saying that you can't be profitable in treasuries, but you got to be good to be really consistent month after month.
Right.
I kind of want to take a scalp at 18. Money back here. Stocks look like they're about to break the Flex high. Oh, how good. Anyway. Yes. Killed some money.
Okay, well, just looking back over this, like loser, winner, loser, winner, loser, winner, loser, loser. And overall, it was positive, but you kind of have to, that one in the E-mini is a little bit, you're taking on a lot more risk there in the E-minis, so I'd still say that we're down, but just given the results overall, I don't think that it was bad. It kind of looks to me more like that I was not trading my spots so well, and I definitely shouldn't have been buying. I don't know why I was doing that. And so it's not like I traded awful. It's just that this could have been a rock star day, and I was not a rock star. And that makes me mad. But that's okay. Today was still, I kind of know on Friday that I have a hard time. So, I don't know what it is about the way that the action goes on a Friday that screws me up, but I was just doing the wrong thing. But I'm going to be tracking, Monday is an important day in the markets, so you always get less action on the Friday. Well, not Friday is weird, but this is when the action's going to really come in, and so starting Monday is where I say, okay, summer trading is over, and we can really look at the performance of some of these strategies. So we've really got to do well.
M9 $100 spread is offering 28.5. That's higher than it's been a pretty long time.
Yeah. Oh, Lucas.
Summer I just sold 27 and bought 25 over and over again. It was like a couple day swing trade and made money. Glad I didn't do that this morning whenever the news or the data came out, and 27.5 immediately bid almost immediately. I doubt I'll try a short on it again for a while.
So Lucas is in YouTube says, I think this profession is one of the ones where you need.
Right, just
hold on. I think this is one of the professions where is one of the really few where if you pretend to live off of this, you need to be good. You don't get to be mediocre. Like maybe you can be a mediocre medic or engineering or whatever, but if you are mediocre at trading, then you have a job on the side while you do this. I agree. I think it's kind of weird when I think back about like where am I in trading, because I think my knowledge of the markets and my read of the markets is actually pretty good, especially on longer time frames, but it's not amazing. And right now you gotta be amazing, but I can do better. I mean I can see where it's the doing better, and I think another year of this I can iron out the kinks in what I'm doing right now and really get into a good spot.
It seems a little odd. Like there's gonna have to be a catalyst that all of a sudden we're going to be on board with 2 rate hikes in 2019, or snap back to, I guess, M9, Z9 going to 0 eventually, and D8, Z9 going to 25, which would be interesting.
Yeah, I feel like just based on the data that we should be getting those rate hikes and that Treasury should be pushing the lows of the year. But it's that stupid trade war stuff is in the way, right? So...
Right, but how... I mean, okay, this is, I guess, my very vanilla view of it. Yeah, the trade war stuff is there, but I think somebody on Twitter made this point actually, and it kind of made me think, but the trade war stuff, everybody bellyaches about it because of tariffs and all that stuff, and that's that's fine. We're going to see some short-term, like some near-term effects, but most of the effects of those things will probably take place, and we'll really feel it. Like the American economy as a whole will really feel it, after the 2020 election. Like it'll be a long time from now. Okay, and I think the Fed knows that. I mean, I think the Fed. I mean, some of them I don't follow, and I definitely don't write down everything they say, but I don't think they're terribly worried about trade wars. Even if they say they are, I mean, they're definitely not more worried about the trade war news and headlines. They're not more worried about that than they are about different data points like wage growth and ADP and non-farm and all this other stuff. CPI.
Yeah.
They're definitely more worried about those things, and those things won't be affected, in my opinion, by trade war nonsense until after the 2020 election, at least. I mean, it happened for a long time.
So why do you say 2020? Because I mean, aren't the trade war, the tariffs already kind of affecting orders and stuff? I mean, I'm curious why that far out. Well, so like for instance, when you look at the trade balance this month, it was really bad. Like what happened was when the trade wars came in, everybody said, "Oh, we better get rid of all of our inventory before we have to pay the tax," and so they shipped it all out, and now we're kind of in the after effects of that a little bit.
Right. I don't know. I guess just in my mind, it's a very macro. And that's probably even still understating it, but macro view of it is just that it seems like all these data points that I think the Fed really cares about aren't going to be horribly affected. And the only reason I say 2020 election is because I think if Trump doesn't win 2020, he'll probably lose to a Democrat, and they're going to reverse the crap out of all that stuff. I mean, in my mind,
Right.
I mean, I'm not saying that I'm not being completely naive right now. I'm not, for experience. I've only got a couple years under my belt, so. But just in my mind, it seems, it seems like the trade war stuff is more political nonsense than anything. And the Fed doesn't really care about a lot of that, about the data that's coming in.
Well, I do think you're right that the Fed doesn't seem to care about that. I saw a story. I wish I had the time to go and find it for you, but I saw a story on CNBC where they were talking about that. Or maybe it was Bloomberg, where they were saying that disagreements in the Fed might be bursting out into the open soon. And it seems to me that the Federal Reserve, the numbers that the Federal Reserve look at, you're right, don't really tell you how trade wars could potentially affect things, and they don't really tell you that a recession could potentially be coming in. Like in their models, a recession is like a really rare thing, and so their model tends to miss it. And there is some argument at the Fed that the things that they need to look at should change. And yeah, but the way that it is right now, I think you're right. They can't really see it. It has to show up in their model.
Right, and that's what I'm saying. On a purely like policy basis, like as far as things that are actually going to adjust what they do with rate hikes, as far as when they hike rates and all that, just as far as fundamental policy change of what their plan is. I think a lot of the stuff that people seem to be talking about that matters somehow, and that equities are on the verge of whatever. It's like. That's fine that you read a Zero Hedge article that it's that equity will be on the verge of something, sure, but you have to understand that when it comes to like rate hikes and stuff, like Fed policy, it's not going to change unless something in their models changes. Like they have to have evidence before they just click into something. So like the idea that I don't know that first that something's going to alter, all of the sudden it's going to alter what they're doing. It just seems overblown.
Yeah, well, so I think there's a bit more to it than that, though.
Oh yeah, no, that's why I gave them whatever that I'm looking at it in a uber macro view that is just probably ill-informed, so much so that even saying a macro view is too, gives me too much credit there. I mean, I'm a scalper, so I not looking at it. I'm not analyzing the stuff. I don't have a special fancy model, you know.
Yeah, well, I think that your understanding of the economics of it is the same as mine. The base case is that they're going to continue raising rates and they're going to continue to be hawkish. The problem that I see is that the market doesn't seem to be convinced on that. The market still seems to think that there's some huge possibility of a recession around the corner, and they're really freaked out about that.
Yeah, like a huge. Because
Yeah.
for them to have, like I said, for them to have zero, I mean, literally pricing in some odds of cutting rates in 2020, I mean, that's kind of crazy. And it's kind of crazy that you could tell that, you know, like, paper put that trade on. Like, it was like, it wasn't just, these didn't just drift down over time. It's like all of the sudden they decided they were going to sell the hell out of all of the 2019 to 2020 Eurodollar spreads and Fed fund spreads, you know, implying, you know, I mean, that's what some of the fun guys, there was one or two arguments like that, no, it means something else. But a lot of the bigger guys on Twitter, that's what, as soon as that happened and a lot of these spreads went either to zero or negative for 2020, you know, they said that it's like, oh, yeah, see, the market's pricing in, that's when they think the recession's going to happen, is 2019 to 2020.
Yeah, you know, so another thing that I gotta go, but just like I was thinking about this when the E-mini opened, and they were selling it pretty hard there, you know. Well, you know, good 10 points on the E-mini. The first week of September is always a doozy. It's like, you know, all the kids are going back to school, the liquidity comes back into the market, you get that first ADP report is always really big, and it's like all of the businesses and everybody out there know that this is a critical time, so it's like everybody throws out their best propaganda. Like the fact that the Woodward book came out this week, it's not a mistake. That the Nike ad came out this week, it's not a mistake. It's because this is like the start of the business cycle and they're trying to like set the stage, right? And so my observation has been that people just aren't logical in September. It's like their kids are going back to school, they're being exposed to all this propaganda and everything, and they tend to be a little bit more emotional in September than they might normally be. And so probably a little bit of that going around right now.
Yeah, that's an interesting point. Yeah, I never guess thought about that. I mean, it makes sense. That's for sure.
Anyways, it was nice talking to you guys, but I gotta go. Later.
Yeah, you take care.
Okay, guys. See you Monday.